Hello and welcome to Spy Money. Today's Friday recap is going to be talking about the market. Earlier today, actually this morning, I didn't have this drawn out, but during the day I started looking, trying to figure out some sort of a pattern that the market is following. And if I go back a little bit to like a 1 hour, and then if I bring this in, you can see that trend right across the top is, the candles are coming up and touching it, and that's just a very good trend across the top. And then we have one across the bottom that is touching all the way down through there, and then even today it come down and touched right on it. So this is called a descending broadening wedge, and it's a pattern that is a bullish pattern once you break out of it. And right now this is probably the best day we've had as far as in the market since last Wednesday a week ago. So looking at be what 5, 6, 7, 7, 8 trading days or so, and we are still not out of the woods on this. This needs to break the 30-50 up here, and if you look, the 30-50 would actually be about right there. So we need to break this and hold in order to, for us to know that we're in a rally. Just because this come up, there's a chance this may hit right around the, I guess it'd be about the 30-40 range, 30-35, 30-40, and then it could sell off again. That is also called a bear trap. We're not necessarily in a bear market. Bear market is when we have a 20% decrease, and right now we are from the very bottom of this. Let's see here. From the bottom to where we went to the top, we're at 15.76%. That's how far we've actually dropped over the last week. And that's really a correction. Anything under 20, like 10 to under 20% is what they call a correction. And if it is 20% or more, then it's a bear market. But in a bear market, you're going to see a lot of businesses shut up and people losing their jobs and things like that. There's a lot more to a bear market than just watching the stock tumble. We do not have that. So therefore, as far as the job loss and all that, we actually have job increases. In last month, I think it was, we had, I think it was in December, and it came out in January that we had the best job market that we've had forever. I think it was 200 and some thousand jobs that were created, 225, I believe. And so we don't have that. So this is just a correction. Do I think it's going to break and keep going? Actually, I do. I do think it's going to be that. If it doesn't, then I think the 2706 would be the next target. So there's a chance that this could come right on down, and then this would come on out. But that's about the size of what a broadening wedge will do. They usually just don't. When it's in a short term like this, they usually don't go very much further. And you can see here we've got 1, 2, see A, B, C, D, E, F. So we got the touches of F. It never touched there. It did touch here, there. So usually when you get E or F is usually when it breaks out. So right now I think we're actually there. I personally believe that we're going to go ahead and continue the uptrend. A lot of the market was already turning today, and with that, I believe that we're in pretty good shape. And we're at the 15% break. I just don't think that we're going to go to the 20. If we did, a 20% would be. Let's see what that would be for. That's going to be right at 20%. Would be the green, the 618. That's my magic number. It doesn't have to go there though. So I think that when we come down and we reversed out, I think we're going to be fine. But like I said, come Sunday when the futures open again at 6 o'clock Eastern Standard Time, we're going to start seeing what's going to happen to the market. This is the 50 EMA. It could very easily just kind of come up, touch that, and then bounce right back down. We won't know until Sunday, possibly even Monday. It may even consolidate on Sunday. So that's where we are with the market. There was a lot of things that. Let's see here. There's a lot of things that actually went up today. Tesla, it went up, which was good. So we're above the 15 on it. I believe that's my number one indicator. If you ever watch the videos, if you're above the 15 and keep on going, then you're in a bull market. If you're below the 15, you're in a bear market. And if you look at this, we have not been above that 15 other than right there the whole week. We've been below it. So we're actually starting our third candle above it. And this is live right now. So you can see that Tesla is starting to run. So it's still growing right there, and I think that we're going to be fine. If you look at, say, Microsoft, the same thing today. It just took off today. So all the charts look basically the same. That's the reason you follow ES. If you follow ES, then you'll see what everything's pretty well doing unless it has news. That's Apple. It's already increasing. And if you go back into the VIX is coming down. It dropped a lot today. So right there was in a pennant earlier today on the lower time frame. So it actually broke that. So we can take those out now. Those are no longer valid. So when it came out of that pennant, it dropped down. We are just now, this is a 1 hour chart, and you can see the candles pretty well stay above this 15. And look at that big old sell-off after hours that is below the 15. So I think that we're headed back to a bull market. This is just a correction. Everything looks good. I've got puts on this, and I'm waiting to see it come on down to get back down into the 14, 15 range. When it gets down here, that's huge money for me. And as long as it stays below the 20, then the market's pretty good shape. When it gets above the 20, that's when we start having trouble. So 20 is the magic number for VIX. If you stay below it, you're good. If you stay above it, then you're in more of a bear market. It's a fear factor. So, and a lot of people look at SPY. SPY is the ETF of the ES, which is the mini future of the S&P 500. This is the ETF of the S&P 500. And it's the same. A lot of people look at the numbers, trying to get above 300 or whichever. The market is now closed on that. It's after 5. The futures run from Sunday 6 o'clock Eastern Standard Time all the way till Friday at 5 o'clock Eastern Standard Time. And I believe that everything looks good. If we would have closed above this 50, I'd have felt a lot better. So we'll find out sooner or later. But and then the DXY, I look at it. I like to see how it follows. It sold off today, so now it's starting to act more normal. Usually the DXY will sell off and ES will go up. That's typical. But lately they've been running together, and they were running together right before the drop, which really was strange to me. So I think that we're going to be fine in that aspect. I think the dollar will continue to go down, and which will help inflation and so forth. When it's real high, then you have high inflation. So the DXY, which is the U.S. dollar, well, actually it's the index for the U.S. dollar, will continue to go down, I believe. So if you're in Forex trades and such, then that will help you with that. And then the ES, I believe, will continue to go up. So that's our recap for Friday afternoon, and it is about a little after 5 o'clock on Eastern Standard Time. But if you have any questions or anything, feel free to put them in the comments. Please like, share, and subscribe. Help me build my channel and to educate others. Y'all have a great weekend if I don't talk to you sooner.